Hi everyone, in this video I will cover my Elliott Wave analysis on Bitcoin and also talk about the Bollinger Bands indicator on a daily time frame as I collected some data that might be useful to you. From an Elliott Wave point of view, the probabilities remain highest for the bulls. We're eventually looking to continue the trend and take out the all-time high once this range is finished. In both the bullish and bearish Elliott Wave scenario, price preferably moves towards the upside in 5 waves to at least take out this high at 119.8k. In the bullish scenario, we have a finished 3-wave corrective structure followed by a 5-wave move up, which is counted as a wave 1, and a double zigzag to the downside in a wave 2. The invalidation for the bulls is currently the higher low here at 115.7k. What you preferably like to see if you're very bullish is a multi-1-2 structure. So a wave 1, a 2, another 5 waves up in a new wave 1, 3 wave in a 2, another 5 in 1, 3 in 2, etc. The more 1-2s you get, the bigger the push in wave 3, and every 1-2 is followed by an additional wave 4 and a wave 5, meaning higher prices. If price would just move to the upside like this, 1, 2, 3, 4, 5, then after wave 5 you expect a deeper retracement again, and this move to the upside will be significantly less bullish compared to creating a multi-1-2. A great example of a multi-1-2 was after the low at 49k over here. Price created a multi-1-2 followed by a very impulsive wave 3, and after every 1-2 you create your 4 5s, which means you're still grinding to the upside and creating higher highs. So this is something that you actually like to see. You don't want price to immediately jump out, you actually want price to stick in this range but create higher lows with 5-wave moves to the upside followed by a 3-wave retracements. If we look at the bearish scenarios, then you basically continue the range sideways. But in both the bearish scenarios, we're still looking for price to continue the trend at a later stage. It just delays the continuation. Now, if we look at the yellow structure here, we're looking for a sideways WX and then a wave Y. And then in the green count, we're looking for a flat in a wave A, wave B, and a wave C. But you can see that the directional bias of the count is relatively similar in both wave X and wave B. Preferably price moves up a little bit and at least takes out this high here, followed then by a move to the downside. After that final structure, you then look for continuation. Now in a WXY, we then have a zigzag W, preferably a zigzag in X, which is the most common structure in a 5, 3, and then another 5-wave structure to the upside to finish X. And then because wave W is a zigzag in a sideways WXY, wave Y cannot be a zigzag and therefore a flat will be the highest probability structure in wave Y, after which you look for continuation. Now in the flat structure here, price preferably moves up to at least the 0.9 Fibonacci, which you take from the start to the end of wave A. And let me use the real price action to do the Fibs. So you want price to move at least to 122k and preferably actually take out the all-time high, swipe the all-time high, and then move to the downside in an impulsive wave C, which should be a 5-wave structure. After C, you look for a continuation to the upside, right? On a 1-hour time frame, your most bearish scenario would be an impulse to the downside, right? So wave 1, wave 2, and then 3, 4, 5 to lower prices. We still have an order block at 113k, some interesting support. However, probabilities are lower for this because this has to be a wave 1, which then has to be counted as an expanding diagonal. There's no other way because if you go into the lower time frames, wave 3 is clearly not a 5-wave impulse to the downside. So this has to be an expanding diagonal, but these structures are very rare. In a wave 2, we then have to count a flat in a wave A, B, and a wave C. And even though a flat is perfectly fine in a wave 2, your wave B touched the 1.618 Fibonacci taken from the start to the end of wave A, which lowers the probabilities for a flat as the 1.618 is very rare for wave B. The invalidation for this particular scenario is taking out that high at 119.8k. Something that I also find quite interesting is that the low over here made at about 115k was quite close to 2 Fib times. So you can't actually see it. Let me show you. But there's actually 2 Fib times on my chart. The yellow one and the white one. They just happen to overlap perfectly here on a 4-hour time frame. Now the yellow fib time is taken from the start to the end of this first structure here, and then the third click is on the high. And I'm basically comparing this range with this range in time, because if we would count this as an impulse in a 1, 2, 1, 2, 1, 2, 3, 4, 5, 4, 5, and this is another 4, 5, right? This is your wave 2, this is then your wave 4, and you look for another move up in a wave 5, then preferably your wave 4 is a little bit longer in time, and this low was made around the 2 fib time compared to your wave 2, which is perfectly fine for a wave 4. So you could end your wave 4 at this particular low from a time perspective. If we look at the wide fib time, which is at the exact same position, but this is a 1 fib time, right? So this one is taken from this pivot to this pivot here to then the third one. So now we basically count this whole range as a single structure, and we compare it against this one over here, either in a 1, 2, 3, 4, 5, or possibly even more bullish, right? Double 1, 2s. But you can see that this low was made around a 1 fib time, which also works nicely. So there's definitely a possibility of a structure being finished from a time perspective. Now, if we then go to the Bollinger Bands, this is very interesting. So in Discord, in the Bitcoin TA public channel, Discord is free. You can join. It's in the description in the link tree. But Time Traveler in the Bitcoin TA channel has been talking about the Bollinger Bands indicator, because if we shortly remove this here, you can see that the Bollinger Bands are very, very narrow at the moment, right? And, you know, if you use the Bollinger Bands, generally when that happens, you would expect a big move. So as Time Traveler was talking about it in Bitcoin TA, I got curious and I was like, you know what? Let's see, since the low at 15K, how many times did we have very narrow Bollinger Bands and what happened after, right? So you can see here, the Bollinger Bands currently are 2.76% away from one another. And I decided, like, I just had a peek at the Bollinger Bands and checked where are the bands quite close to one another. So here we have 3.33, here it's 6.19, right? It's a little bit bigger, but inside this range, it was still the most narrow part, basically. And I did it a few more times, right? You can open the indicator and also check it for yourself. But then I collected some data. So I did not include this one because this is where we are now. But since the 15K low, there is 9 other times where the Bollinger Bands were very narrow. Those are basically the orange boxes, and the white arrows either down or to the upside with the gray boxes. That's the move that happened after the narrow Bollinger Band. So in the past 9 narrow Bollinger Bands, which is basically since the 15K low, right? So all of the narrow Bollinger Bands over here since 15K to the most recent one that we had here in February 2025. So in the past 9 narrow bands, which had a band-to-band percentage of 2.65 to 733, right, percent, the average of the gap between the Bollinger Bands was 5.32, leading to an average of a 25.7% move after, right? So the volatility that comes after was an average of 25.7%, a move either to the up or the downside, right? And that move happened in an average of 9 days. So it took about 9 days on average to create a 26% move after a 5.32% average gap on the Bollinger Band. Now, if we look at the past bands with a gap less than 3.5%, there were 3 gaps of less than 3.5%. This is one of them, 3.33. Right? Then we have over here 2.65, and over here we had a 3.11. So the average is a 3.03%, the gap between the bands, the red band and the green band, right? Leading to an average of 26.3% move, right? That comes after the narrow Bollinger Band in an average of 12 days. However, that is a bit skewed because based on the data, it was 3 days, 5 days, and then 28 days, which is basically an outlier, which, you know, it makes the average look more than what it actually is. But generally, after in other words, a very tiny gap, you would expect quite a big move on average in a most commonly short amount of time. Now then I was like, okay, but so how many fake outs do we have? And a fake out is when price basically moves in the opposite direction first. So we have a narrow band, but price first moves down before you get the move, right? So this is what I then classified as a fake out. Over the past 9 times, we had a narrow Bollinger Band, and there was such a fake out 3 out of 9 times, so 33%. The average fake out was about 7% into the other direction before the real move happened. And the average fake out took about 4 days, but that's also skewed because it was 2 days, 1 day, and 9 day, right? So the 9, of course, bumps the average up. So generally, let's say that if you do get a fake out, the fake out happens in a very short period of time, a day, 2 days, 3 days. Average move 7%. After that, you get the real move. And the real move is then averaging, like 20 something percent. So in other words, you would expect quite a significant move. Now, out of the data, of course, some moves were like 10% or 14% and other moves are 44%. It's average, right? But I didn't think the data is interesting. I just wanted to share it. I know I talk about it a lot now in this video and for a long period of time, but I put some time in it this morning and I hope you find it useful. And you can see here how narrow the bands are. So the probabilities increase for a bigger move. Now, that being said, remove the Bollinger Bands from my chart. And then we go back to a 4-hour time frame. Shortly look at the levels. So here are the levels on my chart. Price bounced on the 1-hour order block here at the low. We have support below us at 117.5K. And to the upside, honestly, the volume levels and order blocks are a bit more interesting than the 2 dailies I have here. But nonetheless, these are the levels I have on my chart, right? Now, if we keep the data in mind with the Bollinger Bands, from an Elliott Wave point of view, probabilities are highest for the high. But of course, the fake out scenario can easily be your bearish scenario, your WXY, or your flat, right? Where this is your quote-unquote fake out before the real move happens. This is your fake out before the real move happens, right? So in that case, it's interesting to at least keep these in mind, and preferably we don't move below this level here at 113. But of course, in 67% of the cases, you do not get a fake out in the opposite direction, and price just continues in the direction of that we expect, basically. It's a very small data set, so of course take it with a grain of salt, but nonetheless, right, it's interesting to show. We do have some news today and news tomorrow. Trade safe around these times. It's Central European time zone, so trade safe because there might be volatility coming on the chart. And then we have the probabilities. On the 4-hour time frame, probabilities are bullish. We're looking for price to eventually take out the all-time high here. And on the number 2 spot, we have bearish. And with bearish, I mean really any scenario that would lead to just significant downside, like you want to lose this range, etc. At the moment, there's not a high probability count that leads to such scenario, because you would need to count this as a wave 1, this is a 2, then you need another 1, 2, and then 3, 4, 5, 4, 5. But as explained in previous videos, this wave 2 is over 10 times the size of wave 1, which lowers probabilities. And in this video, I covered this here. This has to be a 1, 2, 3. But then wave B touched the 1.618. So it also affects probabilities. Wave 1 here is a expanding diagonal, which also lowers probabilities. And in the end, we trade probabilities and we analyze probabilities and that sort of stuff. So, I can't give it the highest probabilities, as you can imagine. Now, all scenarios showed in this video, however, on the 4-hour time frame are actually bullish. Even if you continue the range, eventually you expect price to continue towards the upside. Now, as the current range works well time-wise with the previous range, the one at 107 here, it would be nice if the correction finished at 115, of course, which is what you want in the bullish scenario. On the 1-hour time frame, probabilities are highest for price to take out this high, simply because counting this bearish is difficult. It looks better as a corrective structure, increasing probabilities for price to take out this high, and as a bare minimum, continue this range for a longer period of time, and then we can reassess what happens later. Now, ideally, price moves up into some resistance that I showed earlier after a 5-wave move, right? Wave 1, wave 2, 3, 4, a 5-wave structure into resistance, and creates another 3-wave corrective structure to the downside. And if that happens, we look for price to move up again and take out the high. The more often this happens, the better it is for the bulls. Keeping the Bollinger Bands data in mind, a bigger move is expected. No fake out in 67% of the cases. The 33% fake out probabilities can result in the WXY/flat scenarios before continuation up significantly. it is, right? Disclaimer, I suppose. It is definitely not a big data set. I didn't check all the previous bull markets and all of this stuff. I was just interested to see what happened since 15K. So it's not a big data set, of course. So take it with a grain of salt. But at least now you know how I did it. You can do it yourself. You can go to the daily time frame, put on the Bollinger Bands indicator. Literally just go to indicators right here, the Bollinger Bands, click on this one, put it on your chart, and then go through it, build some data, and it might help you in your trading. So yeah, my data set, it's not big. Take it with a grain of salt, but still, it is very interesting to consider it. That being said, I hope that this video was helpful or valuable to you. On the left, you see a video on the simplest way to use and trade Elliott waves without even counting. And on the right is the Elliott Wave educational playlist to help you understand more about Elliott waves. Thanks for watching and subscribing, and I hope to see you at the next one. Bye-bye.